Hey, what's up guys, John here. 33 million small businesses exist in America that employ a whopping 61.7 million Americans. 46% of these small businesses are behind on rent.
Small business owners have the highest national rent delinquency rate.
Shop owners say this increase could cost them their livelihoods.
43% of small business renters were not able to pay their rent in full.
Now you start to ask yourself the big question, what's going to happen next? Well, look at the data. Look what the big banks are doing. Talking Goldman Sachs, what they just announced they're doing 48 hours ago. Look at what the CEO of Bank of America has warned. And you start to connect the dots, you'll see very clearly where this is all going. Now, I believe, it's mom and pop investors, they own 20,500,000 rental units in America. It's a pretty big portion. I believe a lot of these are owned by small businesses, small business owners, people that, maybe they work for a small business. They bought a duplex 10, 15, 20 years ago. And so as these small businesses start to really feel the pain,
growing list of major retailers filing for bankruptcy protection.
I believe a lot of these billionaires and wealthy people are sitting on so much money right now to get ready to seize the pain that's coming. You think about it, Warren Buffett unloading tons of stock, Leon Black unloading tons of stock. You have the CEO of Salesforce unloading stock, the Walmart family unloading, Mark Zuckerberg, all the prominent tech billionaires all unloading, even Airbnb insiders. Every single major tech company has someone at the head likely that has unloaded tons of shares and stock. Why? It's likely because the middle class is going to be forced to sell tons of assets over the next 6 months, the next 12 months, and they want to be positioned to acquire as much of it as possible. I think we're walking into something huge here. In this video, I'm going to break it down and give you the facts. Please hit the like button. Hit the like button, people share the content, educate more people about what's happening in the U.S. economy. If you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items in your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call tomorrow and take a look at this. So, 2 hours ago, you had BurgerFi filing bankruptcy, Chapter 11. 2 days ago, you had Big Lots filing for bankruptcy. Even 8 hours ago, the Maldives hunts for a bailout to avoid First Islamic sovereign debt default, right? So you have the Maldives falling, right? Like it just shows the sign of the times where we're really at. The CEO of Bank of America, he says that delinquency rates on credit cards are about 9.1%. and on auto loans, about 8% transitioning into delinquency, according to the New York Fed. So you look at this, and then you look at what Goldman Sachs has reported. Goldman Sachs to post $400 million hit to third quarter results as it unwinds consumer business. Goldman Sachs will post a roughly $400 million pre-tax hit to third quarter results as the bank continues to unwind its ill-fated consumer business. CEO David Solomon said Monday at a conference that by unloading Goldman's GM card business as well as separate portfolios of loans, the bank would post a hit to revenues when it reports next month. It is the latest turbulence reported to Solomon's push into consumer retail in late 2022. Goldman Sachs began to pivot away. You think about it, that was when all the billionaires were liquidating 2021, 2022. That's when he's pulling away, right? Goldman begins to pivot away from the consumer operations, beginning with a series of write-downs related to selling chunks of the business. Goldman's credit card business, in particular the Apple Card, allowed rapid growth in retail lending, but also led to losses and friction with regulators. Goldman is instead focusing on asset and wealth management to help drive growth. If you were a bank, what would you focus on? Probably the same thing. High net worth individuals, people that offer very limited risk, very small downside risk. And that's exactly what they're doing because they know that the everyday American consumer is likely going to be facing significant headwinds in the near future. It's an unfortunate scenario. This is what's happening though. Solomon also said Monday that trading revenues for the quarter was headed to a 10% decline because of a tough year-on-year comparison, and difficult trading conditions in August for fixed income. So the U.S. consumer is sitting on a whopping $1.14 trillion in credit card debt. Now, credit card interest rates right now, talking 25, 26%. These are unregulated. These credit card companies wanted to pull interest rates to 30, 32, 35%. They could do it. They are able to do this, which is shocking But you start to ask yourself the big question. If you're a credit card company and you saw delinquencies continuing to rise, what would you do? You'd probably increase interest rates to offset the losses from the people that aren't going to pay you, right? You'd have no alternative. And so this is what I believe is going to happen next. We're going to see interest rates continue to rise, and we're going to see a lot of banks pulling away from a lot of consumers in general. So it's either going to be very, very, very high cost of capital, and it's going to be limited lending partners, I think, out there. It's a big problem. Look at what is happening right now with all these banking stocks. Even BlackRock as well. Wells Fargo, Citigroup, BlackRock, Bank of America, JP Morgan Chase, Bank of America, or Bank of New York Mellon, Goldman, Morgan Stanley, PNC, all in the red. All in the red. So the big question is going to be, what is going to happen next? How is this whole scenario going to unfold? Now, what I think we're walking into over the next 60 days as these student loans become due is we're going to see a lot more defaults. People are going to start making the big decision. Who am I going to pay? Is it going to be my student loan, or is it going to be my credit card? Is it going to be my credit card, or is it going to be my rent? Is it going to be my rent, or is it going to be my business loan? People are going to start making choices and decisions on whom is getting paid. And I think this is going to negatively impact credit scores. I think it's going to make things much more challenging in the economy. And I think that, coupled with the holiday time, the holiday spending time, we're going to start to see, debt continue to skyrocket. As all that's happening, we walk into the elections in November. A big question mark on what's going to happen with America. I think we're going to see consumers getting pushed into a corner, and I think we're going to see a lot of these businesses really making decisions based on fear. And one alternative to all this, I think many businesses are going to start saying, what can I do to reduce cost? Because a lot of these businesses are going to have no choice. I think one of it's going to be automation. I think we're going to see a lot of them look to get rid of expensive U.S. talent and hire new talent at a lower rate. I think we're going to see that really start to pick up, especially in cities like Los Angeles, Denver, Ohio. You follow the news stories, you'll see where where the labor is going to be flowing, and the cheap labor. And I think we're going to start seeing a lot of pressure on wages. If you look in 2019 is when wages were peaking, and then through 2021 during the Great Resignation. During that period, people were leaving their job, making, they would demand a 15-20% pay bump, and they would get it. But now, the last 2 years, what we're seeing is really a contraction of wages. Wages are starting to soften, and the cost of living is getting more and more and more expensive. And so you start to look at what all this is going to mean. All this leads to one major, event, which is going to be delinquencies will skyrocket throughout America. And if you ask yourself, well, if you were a billionaire, what would you do? Probably pretty positioned for that event, right? You wouldn't want to have everything sitting in stock. You'd want to have a lot of cash. You'd want to be able to go out there and acquire as much real estate, business. You want to acquire everything, right? You'd want to acquire everything because the fiat is going to be, I believe, printed into oblivion the next 3 to 5 years. And sitting in billions of dollars in cash is going to be irrelevant. The only thing that's going to matter is hard, real assets. And these billionaires and these very successful companies are going to be allocating funds to protect their purchasing power, which is actually going to be buying real assets. Single-family homes, duplexes, triplexes, fourplexes. These are residential property. You can get a 30-year fixed-rate loan on these properties. So you think about it from the perspective of like someone sitting on $100 billion in cash, a company sitting on $100 billion in cash, which there are companies like the BlackRocks of the world that can go out there and buy tons of these delinquent loans directly from banks. You start to ask yourself the big question. Even if you're a smaller player sitting on, $1 million, you start to think about the big picture here. If you're able to buy a bunch of distressed property and put 20% down and get debt on the other 80%, you're borrowing 80% debt on a currency that's going to be worth a hell of a lot less over the next 5, 10, 15, 20 years. How do you lose money on that deal? Right? This is what we're walking into. It's the great wealth transfer, and it's happening right now. I mean, it's shocking how fast the world's changing. It says that the latest data on charge-offs rates paints a concerning picture of rising financial stress across various sectors of the economy. I mean, look at this. Just parabolic. It went down when everyone got their stimulus checks, and now it's just launching. I think we're walking into a big event. a really big event the next 3 to 6 months. I think that is going to reshape and change America forever. If you have credit card debt, it's not too late. It's not too late. There's a lot of balance transfer options out there. So if you're sitting in 5, 10, 15, 20, 30,000 or more in credit card debt and you're making minimum payments, do yourself a favor. Go online and look at a credit card interest calculator. Type in the interest rate that you have and how much you're paying monthly and get an idea as to what this plan will actually look like. You'd be shocked, I can almost promise you, of how much interest you'll actually pay on making the minimum payments on a credit card. If you do a balance transfer, you can transfer that high interest credit card balance to a 0% APR card for between 0 and 24 months. I mean, 18 to 24 months generally, but no interest for almost 2 years. So it's quite incredible for those that qualify. You need a good credit score, generally, somewhere around the 700, 720 credit score range. Do your research, look into it, find the best solution for you. But I think we're walking into a tight credit environment. You definitely want to have access to good money, and you want to make sure you're in a position where you can pivot and move. You don't want to be pushed into a corner with no options. And right now, you could still find some options. Let's have a conversation about this below. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, or any negative or derogatory items on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free call for tomorrow. Catch you next video.